Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. Before we get started, today's video is going to be a shortened, condensed version of what we usually do in our SPX videos. So in this particular video, we're not going to go over all the different aspects of the indicator. We're mainly just going to go over today's trades for this particular session. If you are not familiar with the SPX Daily Key Levels indicator, then look in the description of the video underneath the video on YouTube, and you will see in the description these particular links that go into more details about how the indicator works and the trading strategy. So there's a video overview as well as additional resources with a Google Drive link for descriptions, links to other videos on different topics about the SPX indicator, and then there's also links to longer that are hour to an hour and a half long SPX trading videos that will go into a lot more detail about the indicator and the daily key levels strategy. If you click on this Google Drive link, we'll show you what screen that takes you to. That'll take you to this particular document, which will have links to other specific topics that are covered about certain aspects of utilizing the indicator. Thank you. Hello, in today's video we'll be taking a look at the Monday, December 15th, 2025 trading session for the CBOE SPX index. We'll be utilizing the Day Trading GPS SPX Daily Key Levels indicator, specifically the V2.0 version of this indicator, which was released about 1 month ago. And we'll be utilizing the core daily key levels trading strategy for trading SPX 0DTE options. This video is going to be a lot shorter than our typical SPX session videos. So as mentioned in the preview, if you'd like to know more details about how this indicator works, what all the different levels mean, etc., then look at the description of this video in YouTube, and you will see links to various other videos. One is a general overview of the indicator. One is a link to a Google Drive document which has videos on specific topics regarding this indicator, and then there's also links to other SPX session videos that are about an hour long to an hour and a half long that go into a lot more details about how this indicator works. As we're not going to get into all the details for today's session, we're just going to go over the trades. Okay, so at 9:30 a.m. Eastern New York time, when the SPX CBOE index opens, the indicator will give you the daily key levels on the screen. As you see here, the most important which of the key levels is going to be the SPX Bull Bear KPL level, which stands for key price level. That is the all-important bull bear pivot for this particular session. We also have the pre-market high, the pre-market low, the YDC, which is yesterday's daily close, which in this case of Monday would be Friday's RTH session close, the YDL, which is yesterday's daily low, which again for this being Monday would be Friday's RTH session low, and the YDH level, which is yesterday's daily high, which would be, since this is Monday, Friday's RTH session high. We also have our R1 through R6 levels above the bull bear KPL, and our S1 through S6 levels below the bull bear KPL. We've drilled down from R2 down to S3, which is recommended with this indicator for starting out the session, so you can see all of the different levels on a more granular basis, and you can also see these important levels here, these QL above and QL below, and then these midpoints above and below the bull bear KPL, which are very important for many reasons, one of which these are your standard stop losses and tight stop losses on bearish trades from the bull bear KPL, and the QL below and the midpoint below are going to be your standard stop loss would be your midpoint below, and your tight stop loss QL below for bullish trades off of the bull bear KPL level. As you can see, we also have the other midpoint levels turned on below, the one between S1 and S2, and also the one between S2 and S3, because as price action dictated the bearish opening here, these levels are used to gauge continuing momentum, and they're also used for waypoints for decision making on regular trades which meet the 1.5 level move minimum threshold. Again, for more details about the 0DTE Daily Key Levels trading strategy and this indicator, please look to the video links that are in the description of this indicator, of this video, excuse me. Okay, so the 9:30 a.m. opening candle closes below the bull bear key price level for today, which is 68.6193, and the close of the candle is still within the acceptable range for a BBKPL level bearish trade. So that is your bearish entry signal for a BBKPL level bearish trade on the 9:30 a.m. opening candle. We are on the 2-minute chart. If you see our other SPX trading session videos, you'll see that we're always using the 2-minute chart. The recommended chart time frames for this particular strategy utilizing this indicator are between 1 minute and 5 minutes, with the 2-minute being the most consistent performer of that, and that's why you'll see that in all of our videos. Okay, so what do I mean by acceptable range? Again, that description is in the description of this video, which I'll show you now. Here are the main links that you'll see. You'll see one is for clicking on a link to descriptions, links to other videos mentioned. That is this Google Drive link here, which will take you to this document here. And here's the video regarding the acceptable range here, which also has an accompanying PDF document. Here are some other videos on other different topics about this indicator. And then this is the video overview of the indicator, and then these are the links to the longer SPX videos that go into more detail about the indicator and the daily key levels trading strategy. Okay, so here's the 9:30 a.m. opening candle. As you can see, it opens below and also closes below the bull bear key price level, and most importantly, it is where it is closing. It is closing below, so that is a bearish entry signal on the 9:30 a.m. opening candle. There are 3 different option strikes that you can use on any bullish or bearish trade off of any of the main key levels. The main key levels for this indicator are going to be the bull bear KPL level, as well as the R1 through R6 above and the S1 through S6 below. The midpoint levels and QL levels are not levels to take trades off of. They serve other purposes. How you figure out the 3 option strikes to utilize on this particular trade are: we're taking the level that we're taking the trade from, the SPX bull bear KPL level, and the closest at the money strike, closest at the money meaning the closest at the money SPX option strike to the bull bear KPL level, the level we're taking the trade from, is going to be your standard play utilizing the daily key level strategy. And in this case, the closest strike is the 68.60 strike, which is going to be a put option since we're doing a bearish trade. The other 2 out of the money options that you can consider on this particular trade is you simply look at the level you're taking the trade from, the direction, bearish, and we look below. We look to the first midpoint below the level we're taking the bearish trade from, and that level is the mid BBKPLS1, 68.5358. The closest strike to that is the 68.55 put option. The furthest out of the money strike you can consider using under this daily key level strategy is going to be the closest strike to the S1 level 68.4522, and that is going to be a level that is one full key level away in the direction that we're trading from the level we're trading from. So we're trading from this level, one full level in the direction we're trading below, since it's a bearish play, is the S1 level. So that is going to be the 68.45 0DTE put option. Here are the ask prices on the candle close. We're waiting for the close of the candle to confirm the bias on this 9:30 a.m. Opening candle. We're not buying intra-candle, we're waiting for the close of the candle, because if this candle had instead crossed above and closed above the bull bear KPL, we would instead be looking at a bullish trade. So you're waiting for the close of the candle. Alright, so the ask prices are here. The ask price on the close of this 2-minute candle, which closes at 9:32 a.m., 13:20 on the 68.60s, 11:30 on the 68.55s, and 8:20 on the 68.45, which is the furthest out of the money option. Your stop losses on this trade are going to be level based for your entry stop losses. On a bearish trade, you look at the QL above for a tight stop loss on a bearish trade from whatever main key level you're taking the bearish trade from. In this case, that's the bull bear KPL. So our tight stop loss is going to be the QL above the BBKPL, the level we're taking the trade from. The standard stop loss is going to, on a bearish trade, is you look at the first midpoint above the main key level you're taking the bearish trade from. In this case, that's this level, the mid BBKPLR1, 68.7029. It is recommended with this strategy that the preferred stop loss is going to be your standard stop loss. If you prefer the tight stop loss, then that is going to be this level. As you can see, in this case, neither one was breached. However, just for your own information, the tight stop losses are more prone to getting stopped out, and that is why the standard stop loss is recommended. Okay, so what we have here is we have a continuation of the move down. First, we go to the pre-market low, and we have a slight bounce up, and then we have this body slamming candle down here, which slices back through PML and hits the S1 level. With this particular strategy, with this daily key level strategy, with this indicator, there are two different types of trades that you can take. One is a scalp only trade, and the other is what we call a regular trade. A scalp only trade requires a one level move in your favor for 100% exit of your options. So in this case here, we have the level we're taking the trade from. The direction we're taking the trade is down, since that is a bearish trade. One full level down is the S1 level. So when it hits this S1 level here, we're looking at the bid prices on the candle close, which those are up here. The 68.60 put is 22.10 on the candle close. Profit $890 per option. The 68.55 is $19.20. Profit $790 per option. And the 68.45 is $14.40. Profit $620 per option. The difference between a regular trade and a scalp trade utilizing this indicator in the daily key levels trading strategy is a regular trade requires a minimum 1.5 level move in your favor for a regular trade. Also, the difference with a regular trade is that when your minimum threshold is met on a regular trade of a move in your favor, then you have many different options as to what you can do at that point. One is you can simply close out 100% of your options like you did with a scalp. The second option is that you can, instead of doing that, you can adjust your stop loss on all of your contracts to break even or break even plus a starting 10 to 15% profit buffer on top of break even. When you move it to break even, you are no longer doing a level-based stop loss. You are doing a stop loss based on the price that you paid for the option. So moving it to break even means moving it to the price that you paid for the option. Moving it to break even plus a 10 to 15% profit buffer initially means adding 10 to 15% on top of what you paid as a profit buffer. The third option is if you're trading multiple contracts, such as 3 or more, say 3 contracts, 5 contracts, 8 contracts, 10, 20, etc., then you have the option of scaling out once it hits the 1.5 level move in your favor. And scaling out would involve selling 70 to 90% of your option contracts when it hits the 1.5 level move in your favor, and then adjusting your stop loss to break even or break even plus a 10 to 15% profit buffer on the remaining runners. Then as it continues to move to other levels in your favor, then you can either leave the stop loss as is and start closing out additional contracts, or you can add an additional profit buffer to your stop loss, and also consider either closing out some of your remaining contracts. As it continues to move down in your favor to other levels, you have the same decisions to make on those different waypoints, and that would be either closing out any remaining contracts, or if you're still in all contracts, closing out all contracts, or continue with the adjustment of your stop losses as it continues to move in your favor. So at 9:52 a.m. the candle hits the mid S1, S2. That's a 1.5 level minimum required move for a regular trade. And here are the bid prices on the candle close. The 68.60 is 27.50 bid on the candle close. The 68.55 is $24 bid on the candle close, and the 68.45 is $17.90 on the candle close. So the 68.60 is now a profit of $1,430 per option. The 68.55 is $24. So that's a profit of $1,270 per option, and the 68.45 at $17.90 is a profit of $970 per option. At 10 a.m. the candle hits S2 and YDC. YDC was yesterday's daily close, in this case Friday's daily close. That's a 2-level minimum ideal move for a regular trade. What we mean by minimum ideal move is that on most low to moderate or normal volatility days, a 2-level move is generally going to be the extent of a move from a bullish or bearish trade off of either the bull bear key price level or taking a bullish or bearish trade off of the other key levels. Generally, you'll see 2-level moves as the full extent. However, lately we've been in an increased volatility environment, so we can also look for additional moves. However, this is your signal here on a 2-level move that you may just want to exit completely, or tighten up your stop loss, or make other adjustments, knowing that anything past here you're going to have to be very cognizant of any potential reversals, especially when you get down to, say, yesterday's daily low, as we saw here. That is where things ended, at least temporarily, on this down move, as we had a hit of the YDL level and then a bounce above. Okay, so this 10 a.m. candle, that's where these are here. We have on this particular move, the 68.60 is now 32.70 on the bid on the candle close. The 68.55 is 28.90 a bid on the candle close. The 68.45 is $22.10 bid on the candle close. The profit on the 6860 is now 1,950 per option. The 6855, 1,760 per option. The 6845 is now $1,390 per option. Now here on the 10:24 a.m. candle, it hits mid S2, S3. That is now a 2.5 level move for a regular trade. So again, how we're getting these level moves in our favor is we look at the level we're taking the trade from, in this case the SPX Bull Bear KPL. We're looking down since this is a bearish trade. One level move down is the S1. 1.5 level move down is the next midpoint. 2 level moves down, the S2. Now 2.5 levels move down, the midpoint below S2. So at 10:24, here are the data boxes for those, for the bids on the close of this candle. As you can see here, there's an enormous amount of additional profit by letting it go down and hit another level here. The same would be in effect if we started to also see other levels get hit. However, as we mentioned earlier, you also have to be cognizant of these levels as well, especially when we're hitting yesterday's daily low, as the tendency to hit yesterday's daily low is that in many times it's going to be at least a temporary end to the move, as it was in this case. And as you can see here, it is positioned below the 2.5 level move here, so it's a good bet that this move was seeking out the YDL, and so staying in for the 2.5 level move was the odds were in your favor here. The 6860 put is now 55.20. The 6860 put is 55.20. The 6855 put is 50.70 in the bid. All these are the bids on the close of the candle. 6845, 41.90 bid on the close of the candle. The 6860 profit is now $4,200 per option. The 6855, the profit is now $3,940 per option, and the 6845 profit is now $3,370 per option. Okay, so that's going to wrap it up for this video. As mentioned in the preview to this video, if you're interested in purchasing this indicator, all of our indicators are sold currently on a one payment for lifetime access basis. What that means is that you make one payment and then you have lifetime access to the indicator, and that also means that you get any additional updates that come out in the future to the indicator, or any additional versions that will have enhanced or new substantial features. You can request, in return for taking your time for watching this video today, you can request a discount promo code for the purchase of the indicator, as we mentioned in the preview, by simply sending us an email at daytradinggps@gmail.com and request a discount promo code. The price of this indicator will be going up soon, as we will be releasing the V3.0 version of this indicator in the near future, and when that happens, the price of the indicator will be going up substantially, as it is going to have a lot of new substantial features. So if you are interested in this indicator, now is a very good time to buy, because not only are you going to get it at the lesser base price that it's at currently, but you'll also be able to take your discount promo code off of the current price. So again, if you like this video, please hit the like button, as it helps us with the YouTube algorithm. And then if you'd like to be notified of when we have new videos on either this particular indicator or any of our other indicators or any other trading topics, then please hit the subscribe button so you can be notified of any new videos that we post on YouTube. So again, thank you for taking the time for watching this video. Again, just to reiterate, if you want to know more about how this indicator works, what all these different levels mean, please look in the description of this video, as we noted earlier. for links to other videos that will give you more details on that. Thank you, and we wish you much prosperity in all your future trading endeavors.